Good morning, afternoon, evening, depending upon where you are. It is the first frost of the year in the Washington, D.C. area, so the seasons have changed here. So that'll require a little warm coffee to go with our early morning meeting in Washington. Welcome and thank you for joining. And as you know, all the participants have received the agenda papers for the video conference, and those papers and notice the meeting have been provided to the public on our website. So please look to that if you don't see the papers in front of you. We also wanted to welcome Ian Umtega, who has joined us as Imran's TA today. So welcome, Ian. It's great to have you here. I also have a warm welcome to Mike Ashley, Ken Song, and Jeff Kwan for joining the IAASB PI project discussion this morning. We look forward to hearing with Mike. He and Josephine, who've been partners in this project from the IAASB coordination perspective, will be taking the lead in that discussion today. Warm welcomes also to our public observers for the meeting. Karen Stothers for the PIOB, and Jim Dowkin, our CAG chair, and Yosh Matsumoto from the Japan FSA. And again, as I said, thank you for all of those watching us on YouTube. I also just see that Stavros Stamadakis is joining us, IAASB chair. So warm greetings to Stavros, who's with us today too. For the call this morning, we will receive an update on the IAASB's project on the definitions of listed entity and public interest entity, and the board will have an opportunity to provide feedback to IAASB. We also want to discuss our possible project to undertake narrow scope maintenance of IAASB standards as a result of IAASB's work on listed entities and PI. So just a reminder on that. Our goal is not to redeliberate what IAASB has gone through in the thorough due process, but to determine to what extent that we could achieve one of our top strategic objectives of convergence between the two boards, and how appropriate their changes are, assuming we want a converged approach to our standards. So keep that in mind as we go through the paper today. We also have a call tomorrow evening, where I'll be in a different room. I'll be up in New York. We'll be testing our facilities for our potential hybrid meeting, not potential. We will be having a hybrid meeting in December. So it will be from a different place tomorrow in New York. Tomorrow's sessions, first we'll deal with the discussion and approval, hopefully, of the final conforming and consequential amendments to IAASB's other standards due to the new and revised quality management standards. The second part of the meeting will deal with our complexity, understandability, scalability, and proportionality working groups draft frequently asked questions on audit documentation. So I'm exhausted from saying CUSP full name. That's clearly why we use the CUSP acronym. We need to decomplexify that full name. Today, we're going to go to the IAASB PI project. I'm going to call upon Josephine to take the lead, but she will be working with Mike Ashley to take us through the meeting paper. So Josephine, can I turn it over to you?
Yeah, thank you, Tom. And it's now the afternoon, so good afternoon everyone from one of our UK studios. As in July, I have actually a great number of people to thank for the work leading up to the presentation today, and of course great thanks to Mike for joining us and updating us on the board IAASB progress. So thanks also to Jeff, Ken, Kalina, Natalie and Vili, who've done a sterling job turning around papers and helping us progress our papers for the meeting today. Then, of course, thanks to the IAASB PI working group. So that's Denise, Chumwee and Dan. And of course, always to the IAASB PI task force, who have been always so helpful to the correspondent members, Chumwee and I. If we could move on to the next slide, please, Michelle, thank you. So as already mentioned, and as the slide shows, today we're going to receive a project update from Mike, and it'll be a bit of a tag team approach as we did with Ken in July. And then, as actually promised in July, we're looking for the IAASB's feedback on the more recent proposals in respect to the publicly traded entity definition. And we'll also seek some feedback on other matters such as the overarching objective, the PI definition, and progress in respect to the transparency requirement. Then, as Tom has already mentioned, in order to actually progress the discussion on the development of a project proposal so that we're really in good shape in March to seek approval from the board, we have set out our initial proposals for discussion in respect to the scope, objectives and timeline, and of course as well the public interest issues. So quite a bit to get through today and discuss. And on that note, of course, we will assume that the board is familiar with the issues paper. And so Mike and I will probably just touch on the highlights and focus more on the questions and obtaining the board's feedback. So that's actually it for me for now, for a couple of slides. And I'm actually going to hand over to Mike to take us through the first topic. Thanks, Mike.
Thanks, Josephine. So just a very quick reminder of the way we have tackled the question of defining PIs, which we termed the broad approach. And it's got a number of components to it. To start with, if you like, there's a baseline of what we think, on using a sort of 80-20 rule, most countries will have as PIs. And therefore we have created, if you like, an expectation that certain things will be in that. And this is publicly traded. We'll come on to the definition of publicly traded entities, effectively banks and insurers, plus of course, whatever a national regulator defines as a PI. But we have, if you like, started with publicly traded banks and insurers as a very broad category, fully expecting that national regulators will seek to refine that definition to A, make it explicit what are in those categories, probably by reference to local legislation, and B, to potentially exclude things which they determine do not meet, even though they might ostensibly be in these categories, do not meet the definition of PI, given the overriding objective and the criteria we have set out within the framework. And examples of that would be, for example, smaller credit unions or even credit unions as a body, which certainly the EU has taken out of the bank definition. In addition, however, we are also being very encouraging for national regulators to add. One of the things we are seeking to do through both establishing the framework, establishing the criteria, and if you like, almost giving them a job to do in terms of the refinement piece on the top down, is to also think about the bottom up, i.e. what other categories should they add to that in terms of what meet the PI, what we would say is a PI criteria in their local circumstances. And things like that, as we'll come on to, might include, for example, collective investment vehicles or pension funds, which we had originally put in the top-down approach, but we are now, the view from the task force, subject to the board's discussion in December, is that they are better dealt with in terms of the bottom-up approach. That's not to say we don't think in appropriate circumstances they meet our criteria for being PIs. We just think it's going to be too impractical to expect national regulators to deal with all of refining that and deal with that in a sensible and pragmatic way, which means that this is implementable. And then the last bit that we have is the role of the firms, where we do think that despite being successful with national regulators taking on an expanded PI definition, there will always be room for more idiosyncratic occasions when things ought to be, certainly from an independence perspective, dealt with as a public interest entity. And we've paired that, as you know, with the transparency requirement, which we'll also discuss later. So if you want to just flick over to the next slide, which I won't take very much time on at all, we did have a joint session, an IAASB and IASB joint session with the CAG, and representatives from both the CAGs were generally supportive of our responses to the key issues that have been raised by respondents on the ED and the revised proposals, which I've taken you through some of those. And we have taken their views into consideration with how we progress this. So if we flick onto the next one, which is publicly traded entity, both our board at the last meeting and the CAG supported the task force proposals to have the term publicly traded entity as a PI category to replace listed entity in the extant code. They asked us to look at clarifying the concept of publicly traded in the proposed definition. And we have, and we will be discussing with IOSCO later this week, also incorporated listed entity to indicate that it is, in most cases, a subset of publicly traded entity. And that was done because IOSCO were very concerned about just eliminating the term entirely. We did not want to go back to listed entity, but we do agree that in nearly all cases, as defined by local regulators, it will be an example of a publicly traded entity. There was some question in terms of what do we mean by financial instrument, which you'll recall is part of our definition of publicly traded entity. We looked at whether or not it would be possible to define that. We concluded at the end of the day that, if you like, the common sense definition of that was adequate. And we didn't want to hook ourselves into convoluted definitions as set out in IAS 32, where if they've got quite a simple definition of financial instrument, it's basically a financial asset, liability, or equity, but then they have long definitions of what all of those are, so it's not very practical to use. So we have kept with a plain English definition of financial instrument. So we go on to the next slide, just in terms of where we are on publicly traded entity definition. At the moment, the proposed definition revisions we took to our board was, as it says here, an entity that issues financial instruments that are transferable trade through a publicly accessible market mechanism, including through listing on a stock exchange. And then we have, as an example, a listed entity is defined by relevant securities law or regulation is an example of a publicly traded entity. We're still toying with potentially slight wording changes about how we incorporate listed entity into that definition, but I don't think substantively we expect that to change significantly. We are also, as I said, meeting with our IOSCO later this week to talk to them about it. And at that point, I will pass back to Josephine, I think.
Yeah, thank you, Mike. So next slide, please, Michelle. So in terms of our consideration and the publicly traded entity definition, the IAASB will, of course, need to consider whether to adopt the definition as a replacement for listed entities, because our differential requirements obviously use the term listed entity. But as highlighted in paragraph 26 of the issues paper, it's not quite as straightforward as just swapping or simply replacing one term with another. So in particular, the additional entities will be scoped in under the differential requirements as a broader range of entities being captured now under the PTE definition, just say it out loud, publicly traded entity definition. I just actually do want to apologise in advance if I keep swapping PI with PTE. I keep making that mistake. Anyway, if listed entities as a category of PTE are now described as being defined by local law or regulation that could result in a broader or narrower scope, then we need to think about that as well. But the working group are also very conscious that even though this decision is not straightforward, an overcautious approach leading to multiple definitions in our standards could actually cause more complexity for our standards and, of course, misalignment with the code, which is something that we really are trying to avoid. So can we move to the next slide, please? So we're on to the first couple of questions. So the first question is whether the IAASB agree with the matters that may need to be considered as part of the IAASB's project in determining whether to replace listed entity with publicly traded entity, and that's per paragraph 26, as I already indicated. And in particular, are there actually any additional matters to those set out in paragraph 26 that we might need to consider in our deliberations? And then the second question is whether the IAASB have any input for IASB on their proposals for publicly traded entity prior to their actual final approval decision in December this year. So Tom, if I can hand back to you, we could go through these questions now. Thank you.
Thank you, Josephine. Okay, any comments on questions 1 and 2 regarding a publicly traded entity? Or as Josephine is now given an acronym PTE, which confuses me. It reminds me of, I'm thinking of FTEs. And Kai.
Hi, Tom. Thanks very much. And good afternoon from Europe, especially Germany. Thanks for the presentation or the work which have been done by the working group. I have two brief comments. Firstly, relating to question 1. I agree with the matters that may need to be considered as part of the IAASB project on the use of the terms public interest entities, public traded entity, and listed entity. And my answer, Tom, to question 2 is in IAASB's latest proposal for the definition of publicly traded entity, the words "a stock exchange" need to be changed to "an exchange," because in my view, the word stock is associated with shares only and would not include other exchange traded financial instruments. These are my 2 comments. Thanks.
Thank you, Kai. Diane.
Thanks, Tom. Hello, everybody. Greetings from Boston. I hope everybody's well. Thanks so much for pulling the materials together. I have 2 comments. Relative to question 1, I agree that the matters identified are appropriate. My 2 comments are in the definition, and the words that I struggle with a bit are the words public market mechanism that you've included in the definition. And maybe it's just my mind, but I think that probably could use some help in defining what is meant by a public market mechanism. And maybe part of what I'm struggling about is a fundamental concern that I'm personally not convinced that over-the-counter securities, what we would say pink sheets here in the US, that those would really fall into the scope. I'm not sure that there's a burning platform from stakeholders to understand those entities. They tend to be smaller, less sophisticated. So maybe my struggle with the phrase public market mechanism is founded on the fact that I'm not convinced non-regulated exchanges, over-the-counter markets should be brought into the definition. So those are my comments. Thank you.
Thank you. Julie.
Good morning, and thank you, Mike, Josephine, and your respective groups for pulling this together. My comments are brief on this one. On number 1, I agree, but Josephine, as you outlined the potential complexity with the terms, I'm in strong agreement with that point, because I think we could end up with a lot of different types of entities within our standards called out. So we have listed entity, we have publicly traded entity. Sorry, I'm not on PTE yet. We have a less complex entity now in a standard. We have, I don't know what other entities we have, but I do think it could get quite complex when you start to think about the different categories. But largely, I'm in agreement with question 1, and in question 2, I didn't have anything else to add there. Thanks.
Fernando.
Thank you, Tom. Hello, everyone. I also am in support of replacing listed entities. I guess for general reference, in my jurisdiction and the rest of the Latin countries, this is not really a big issue. Regulators are not really quite active in terms of dealing with the definitions. So I think we can accommodate easily the project and make it work as it is proposed. Thanks.
Thank you. Sue?
Thanks, Josephine and Mike. On question 1, yes, I also agree. I did have one observation around things for us to consider, which I'm conscious that a number of smaller firms use the term listed when they're talking about the scope of what entities they're going to work with, particularly when it comes to things like ISQC1 and obviously going into ISQM1. So it is a widely used term that impacts the, I suppose, the application of a lot of requirements to firms. So obviously something for us to reflect on there. And then on question 2, I think, Mike, I was probably encouraged. You said you were still working on the wording here, because I think, like others, I probably found it just a little bit sort of circular, possibly a little bit confusing. And I wrote down, when you talked about the fact that in most cases, a listed entity is a subset of a publicly traded entity. So I think maybe just a little bit of fine tuning there would be helpful. And there was a question related, or there was an observation in the paper about considering whether to replace the term example with category. And my personal preference would be to keep with example, because I would be concerned that creating categories would potentially be just introducing another layer of complexity that perhaps wasn't needed. Thanks.
Thank you, Sue. Ada.
Thank you, Tom, and thank you, Mike and Josephine and the working group for all the work that has gone into this. It seems that Sue has read my notes. I have pretty much the same. I also noted down in most cases and took note of the comment that Mike made, that it's still being worked, because the way I read it, well, and I also agree with Julie that we need to be careful by not mixing terminologies up all throughout. And if we include listed entity within the definition of publicly traded entity, personally, I don't see the need for it. I understand the concerns raised, but in the way I currently read listed entity here, it doesn't seem to allow for the most cases scenario, particularly when their debts or shares are non-transferable. But I take comfort from the fact that it's still being worked on and tinkered with, but wanted to emphasize the comments that Sue made, because I had pretty much exactly the same. Thank you.
On that point, of course, we can make it a lot simpler. Of course, we need, as would be part of our project, is reducing the amount of categorization within our standards and changing where the effective fault lines are in terms of differential requirements too. So some of that could be on us too. Wendy?
Good morning. Thank you, Tom. I thank this group that has put this together, lots of work effort. And for me, I agree with a lot of the comments that have been made. I agree that the items that may be considered as part of our project are appropriately laid out. What I couldn't help thinking about, and I don't know if it's part of what has been proposed, is how this would impact audits of LCEs. And I struggled a little bit with the continuous add-on to the definition. And Tom, your comment just now is very helpful. We can streamline that, but I'm kind of stuck on less might be more. And then my other comment in this area is our focus from an IAASB perspective should be on the stakeholder group. And by the definition now, the stakeholder group, I believe, has gotten very large. And to pile on to something that Diane said, in the US, we have a lot of clients that might quote unquote be listed, and it might be tradable, but the stakeholder group is really small. And so for those entities, the consideration of the cost of adding on the additional requirements should be reflected upon. Thank you.
Thank you, Wendy. Roger.
Yeah, thank you, and congratulations to the working group on the papers and the joint task force. Question 1, I agree with the matters that have been outlined in determining the replacement, and I can't think of any other matters. Like others, I don't see much benefit on the addition of the listed entity example at the moment. I would have thought it was clearly report under the publicly traded, but I'm too glad that people will continue to work on it. So I would encourage that. Thank you.
Okay, thank you. Sachika?
Hello, everybody from Tokyo. First of all, thank you, Josephine and Michael and your team on your hard work. With regard to question 1, I agree with paragraph 26, but I also think, risk of adding complexity is very, very important point that we need to consider. I think it's what similar to what Julie said. I think having very similar terminology in the standard makes the standard very difficult to implement. So maybe this point is very important to consider in the project. And with regard to question 2, I have nothing to add. That's all from me. Thank you.
Thank you, Sachika. Kai Morton.
Thank you, Tom, and thank you to Josephine and Mike in the group that have worked on this. I like a lot of the changes that's been done. And on question 1, I don't have any additional matters to be considered, and similar concerns as being put forward by Ido and Sue and Julie on some of the complexities in the definitions. And also happy to hear that the words are being played with so that we can get to a definition with less complexity in it. So, thank you.
Mike is going to probably respond to this, but remember that the listed entity concept was really important. There are IAASB discussions too, because of the potential of it being embedded in law and regulation. So just as I remember this whole concept, that's a context to be kept in mind when people raise that point. It doesn't mean that it's valid, but that's where it came from. Isabel.
Yes, hello everybody from Paris. Thank you to the task force for having prepared this document. On question 1, I agree with the matters that are highlighted in paragraph 26, although I was surprised by what we have in 26 little a, where we say that the new description of a listed entity is different than the one we used to have in ISBA code and in IAASB standard, because it's adding an additional layer of complexity, because we will have the old listed and the new listed, and I'm afraid that the users of our standard may be lost or may not apply properly the requirements. So we have to work having the CUSP, clarity, understandability, scalability, proportionality principle in mind, to try to write it in a way that is clearly understandable and also easy to translate. And regarding question 2, I was interested, I think like Sue, by the move from saying that the listed entities are a category to saying that the listed entities are an example, because I think that's what they are. And if we start creating subcategories of publicly traded entities, it will become very difficult and people will ask for a full list of categories. So just saying it's an example would be better. Thank you.
Thank you. Imran?
Good afternoon. Good afternoon, Chairman and colleagues. It's a wonderful summer spell here in Johannesburg. So I'm looking forward to spending today and the remaining days with you. Tom, thank you for welcoming Ian in his role this week and this quarter. Mike, we have gone back on this project for many, many years. You and I coordinated on this in the early stages of the EQR project. It's really good to see you back here visiting our board. One of the clearest messages one gets from this paper is the excellent level of coordination between between the two boards, but also between IAASB and the various parties that made inputs into the project proposal, into the exposure draft. So I congratulate you and thank you for that. As someone who sits within a regulator and a standard setter, this overall project remains extremely important and timely, And Mike, the aim of the ethics board for December approval is extremely helpful. You can appreciate that we have a host of local projects. It must be equally so in other countries in the world, where these projects hang on these amendments to these definitions, whether they're ISA-related projects or code-related projects. And so these clarifications are useful so that those local projects can then proceed with the clarity that they need. In respect of the two questions that are on the board, are on the screen, I think the first one is really as it relates to what we see as our marching orders for the task force that will come into existence. And I believe that what we have captured in paragraph 26 is complete. I got the impression in reading paragraph 26 and the examples given in the appendix that it's a very structured methodical approach to it. What I thought we may battle with later on was how we would make decisions around this when there are different views in our board. And so I'll repeat this point later on when the questions are a little bit more pointed, Josephine, around when there are differences of opinion about this, what weight will be attached to different points of view. But otherwise, I thought that the structure was really clever and well done. Michael, you'll be happy to hear that in respect of the proposed definition of publicly traded entity, I was quite happy with it the way it is drafted. And so no amendments to propose to it. It can understand clearly why you've made the changes that you have proposed. So you have my support on that. Thank you.
Thank you, Imran. Len.
Yeah, thank you, Tom. Thank you, Mike and Josephine for the introduction. Agree with a lot of comments that's already been expressed. So nothing additional, but I do have a couple questions for Mike. I know people have raised the question about listed entities, and we all know that from some of the background information issues paper, it's the IAASB's view has been the definitions in their local laws and regulations. I was wondering if, Mike, are there anything else that IAASB is raising other than the local definitions? The reason I say this is the listed entity definition may have some variations locally as well, and the IAASB definition is almost a principle-based definition. Then some of the local laws and regulation listing rule, they might have additional categories or examples into their definition. So I do realize that they have a strong view, but I was wondering, are there anything addition other than because it's be part of the definitions and laws and regulations? I also note you will have another conversation with IAASB, so just wondering, are there any other factors that the securities regulator might have already expressed to you, in addition, being that it's embedded in their local laws and regulation? That's number one. Number two is the term financial instrument, and I agree with you in terms of not using the IAS 32 definition. But I was just wondering if the task force at the IASB level would have considered first-time implementation in terms of applying your definition and with a general term on financial instrument, because it might creating inconsistency in practice. So not comments, but more targeted questions for Mike. Thank you.
Thank you, Len. Just my 2 cents on this. I'm in strong support of the direction that's been outlined in the paper. I do remind people of why the question of listed entity was raised in the first place, that the evolution of how markets have evolved, that the listed entity, this concept was beginning slightly obsolete. And I think that the task force, IASB task force, has done a nice job at least addressing that issue, plus securities regulators' concerns, because the term listed entities embedded in law. So obviously some tweaks could occur, but I think directionally I see no problem. And in terms of complexity, as I said, from our standpoint, we could deal with quite a bit of that in the way we make categorizations within our standards if we continue to have differential requirements. One possibility, and I'm not saying this is where we need to go down, but you could see a simplification of categories of which differential standards apply to PIEs or publicly traded entities, which embody listed entities, and the rest. And I would imagine maybe, of course, the LCE standard will have to play itself out, that LCE is mutually exclusive to listed publicly traded entities and PIEs. So I think some of that is, I think in Venn diagrams a lot, but it could play itself out and we could deal with simplification. All of that is subject to robust analysis and avoiding unintended consequences. And we need to analyze that. And I think that's part of our project proposal. But that's to say that I'm pretty comfortable. And what I've heard from the board is that there's no fundamental objections that would see this as a blocker to convergence between the two boards, and support for the approach outlined by our working group as well, and that there's some interested concepts for the IAASB task force to take on themselves. Josephine and Mike, is that your take on it too?
Yeah, I'll jump in first. Thank you. Yes, I think that's quite right. And your point about simplification obviously echoes some of the board members' comments that highlighted our point in respect of reducing the risk of unnecessary complexity in our standards, and then, of course, misalignment with the code. But on the whole, yes, all board members that spoke agreed with the matters that we set out, and recognise there is a little bit to do here. But I agree, we didn't seem to hear any fundamental objection in heading in the direction of PTE as adopting PTE as a definition at this stage. Mike, did you want to comment on some of the points that were raised about the PTE definition?
Yeah, thanks, Josephine. And obviously there are some points there that we will reflect on. Just a couple of general comments I would make at this stage. One is, we do expect local regulators or local national standard setters, as appropriate, to refine this definition by reference to the markets that exist in their country, as much as we would expect them to refine the definition by reference to legislation governing banks, for example, and insurers. So to take the point that was made about pink sheets, I would be looking to, whether it's the AICPA, whoever, to take a view, frankly, on whether pink sheets should be incorporated within this definition, or pink sheets with companies meeting certain criteria, whether that be appropriate size criteria, should be included. I do understand from talking to at least some of the firms do regard, again, at least some of the pink sheets as pies at the moment. So I don't think we would want to rule them out. But on the other hand, we're not necessarily ruling them in either. Again, we are looking to local bodies to do some work in this space. And when I say listed entities, in most cases, I think it's nearly all cases, but there are occasions when, certainly in the UK, groups will have subsidiaries that have listed debt, which is wholly owned intra-group, and it's only done for tax purposes. And there would not be much sense, for example, in categorizing them as pies. And I think I'm right in saying, Josephine, that the FRC doesn't categorize those necessarily as pies. So again, we would expect local bodies to take a view on that, but it would be very much down to a local jurisdiction working out what it made sense to include within this definition, given the objectives we've set out, the criteria we've set out, and how we've described it here.
Thank you. Any other comment? Josephine, can I turn it back to you?
Yeah, actually, it's back to Mike again. Thank you, Mike.
Okay. Sorry, Mike.
That's all right. Next slide, please, Michelle.
Okay, and this was just to comment on the overarching objective. I seem to have flipped
on too far.
Slide. I've gone 2 slides. Can I have 9 back? I was going to say, I'm easily confused. So again, the board and the CAGs were generally supportive of the proposed revisions we had that we presented in September. And this was retaining very much the public interest focus on financial condition, with some additional explanation of the term within the code, but we will obviously also put some additional commentary in basis of conclusions. There was this concern about, is there two levels of independence or audit quality? We've tried to address at least some of that by removing reference to enhancing confidence in the audit and clarifying that the PI independence requirements are to meet the heightened expectations, which is a phrase we have used elsewhere within the code. We've also moved the list of factors to a new paragraph, which is not just cosmetic, because I do think it does give your board the opportunity to think about whether if you do sign up to the overarching objective in 400.8, it still gives you the opportunity to think about the factors in 400.9. They do not need necessarily to be identical. So if you go on to the next slide, as we've set out here, this is the revised revision that we took to our board in September, and we are not currently proposing to make any revision beyond this. I won't read it out because you can all read, but I'm happy to either leave it up there or flip back to it in a second if we go on to the questions.
Okay, great. We have the next slide, please, Michelle. Thank you. So from the IAASB's perspective, you'll recall that in July, we were generally supportive of the overarching objective in paragraph 400.8. But before we go to the questions, we did want to touch on a couple of matters that were raised at the board meeting, and those were in respect of the use of the term financial condition and, of course, the impact on going concern. So the first point was to check whether the term financial condition is used in our own standards and of course, how frequently. So Kalina did a fine search and found that the term is actually used extremely rarely in our ISAs. In fact, it's not even a handful. But where it is used, it's used as examples only, and it's used, each of those examples is used in a similar context. And of course, that's set out in the issues paper. But ultimately, having looked at that, the PI working group do not believe that those examples are at all inconsistent with IAASB's proposals. So that was good news from that front. And then the second area the PI working group discussed was considerations in relation to the impact of this term in respect of going concern. Now, just more generally, not just related to going concern, the term financial condition does, of course, not stand alone in 400.8 as a single consideration, but it is in fact linked to the significance of the public interest. So we have to sort of step back and think about the wider context and use of the term. Also, to one of the board members' comments, I believe it was Roger, who mentioned that it is important not to interpret the term as denoting poor or adverse financial condition. It is a neutral term and should be considered as such. And maybe there is something that we could put in a basis of conclusions or even in our own exposure draft to make sure that this is very clear. And then finally, considerations as to whether it would be appropriate to have differential requirements for ISA 570 would actually be considered or explored as part of our future project on going concern. Now, I'm not saying there would be differential requirements in relation to going concern, but certainly it's not something that this particular working group would address. And of course, that now brings us on to the next question. So if we could have the next slide, Michelle, please. Okay, so question 3, does the IAASB continue to support using paragraph 400.8 of IAASB's proposed revisions to the code as the common overarching objective for use by both boards in establishing our differential requirements in the board standards? Thank you, Tom. That's back to you now.
Thank you. So board reflections on question 3. About the, Edo.
Yes, thank you, Tom. I raised some concerns with the inclusion of financial condition the last time. I've read the arguments, I've reflected on them, and I'm not more comfortable. I struggle with putting financial condition front and center. These are public interest entities for more reasons than just the financial condition. And that's the financial statements are there to provide accountability for management and the board, and to provide transparency to the users of the financial statements. And by then putting financial condition front and central, I think we're doing a disservice if this were to be our objective for differential requirements. And I can, yeah, I still struggle with it. And then to put this front and central as our objective, well, if you look at the world around us, transparency of financial statements, and I appreciate this will be primarily non-financial information, but where companies are moving into in respect of climate change and other elements, arguably are getting a lot of attention and require transparency just the same. And I feel that this is a rather narrow-minded view of what public interest is geared to, which I struggle with. Thank you.
Thank you. Kai Uwe?
Yeah, thanks, Tom. Very briefly to question 3, I continue to support using paragraphs 400.8 as a common overarching objective for use by both the IAASB and the ESPA. Tom, that's all. Thanks.
Thank you. Roger?
Yes, thanks to the task force for reaching out. Look, I've shared the same concerns that Edo's has. I don't understand necessarily the benefit of including financial condition in 400.8 for the reasons that Edo has outlined. When we look at factors to consider in the financial condition, I would consider a lot of those things non-financial, and I think, and we could talk about non-financial actually turning into financial at some stage in the areas, but I struggle to understand it. But I very much appreciate that it's been through due process, and I very much was looking at what was the consequences of using it, and you've done the work on the consequences, so it's not inconsistent. That's the conclusion. Not that it's consistent, but it's not inconsistent with how we've used it before. And also there would be a careful consideration, especially that there wouldn't be a negative connotation to the term. I still struggle to see what the benefit of the inclusion of the financial condition there. I think we could just delete it, but I am aware of due process, so I am cognizant. I don't see it as a fatal flaw. I am cognizant of the fact that it's gone through due process in those particular areas. Thanks.
Thank you. Imran?
Thank you. Through you, Chair Michael. In consideration around this paragraph 3 and reading it, this question 3, and reading it together with the appendix where you provide what this would look like in the overall code, I want to make 2 or 3 comments. The first is that we continue to describe this as the objective, though I wish there was a way within the code to have a heading that described it as the objective, because that would just signpost it directly that this is the overall objective in this area. The second one is that the comments that both Edo and Roger have made are far more eloquent than I would have described it. I support totally what they've said in relation to the usage of the word condition, but I stop short of Roger's final comment. In my mind, I feel like maybe something remains missing in the discussion in the issues paper as to why we remain committed to the words financial condition. I appreciate that we've extended 400.8 with the underlying text due to the potential impact of their financial well-being. And the issues paper says to us that these additional words somehow clarify financial condition. In my mind, I was not sure how these additional words clarified financial condition, and how the words that you've added don't also mean financial position and financial performance and all of those things. And if indeed, as Roger has said, I know Roger's made this point now about the negative connotation of how this is described, I read the introduction of the additional words as doubling down on the negative connotation of financial condition, not the other way around. So I thought that we share that feedback with you as you reflect on this. That is the only point to make. The only 2 points to make here: the need for a possibility of a heading, and really just subscribe to what others have said about the continued use of the word condition. Thank you.
Okay, Wendy.
Thanks, Tom. I too struggled the same way and appreciate some of the comments that have already been made. And I was even hesitant to raise my hand because I also do recognize the due process that has that this has gone through. The only add or the two considerations, and I did spend a lot of time with agenda item 1A and looking at it and the length. I still support paragraph 400.8 as the overarching objective for use by the IAASB and IASB in establishing the differential requirements. But I'm again struggling with the term financial condition and how that potentially impacts considerations at when it comes time for the auditor's report and considerations we have to make there. And I have different comments on what belongs in the auditor's report later. But also, again, the length of the requirements and how long it takes to get through them. And particularly in the revisions to 400 particularly in the revisions to 400.9 and the placement of those. I wonder if more time needs to be spent on who needs to make those determinations. Is it the auditor that needs to make those determinations, or perhaps should it be the company? So those are my only two adds to the considerations here. And again, still support 400.8 as the overarching objective.
Okay. I'll ask Mike to give some comment, but I think what's particularly relevant to know is ultimately the IASB has run a full due process. I think Roger made this point too. And they're coming to conclusions on it based upon what they've heard. And the question in my mind, as much as anything else, is would this be a fatal flaw for our continuing down the path of convergence between the two board with the use of financial condition? Now, I think Roger was very explicit and said no. That doesn't mean that points don't have to be taken, but I do think at some point we'll have to grapple with that issue. I think, Mike, maybe it's best right from you to hear how you've considered it, because I know this point has probably been discussed at least 75 times by your task force, and maybe the context would be useful of why you reached conclusions that you have.
Yeah, thanks, Tom. The gestation for saying anything in this regard was to distinguish entities that were regarded as of public interest insofar as it might impact auditors, both from an independence perspective and potentially for aspects of how they conduct the audit, from other things which might be regarded as of public interest for other reasons totally disconnected from the auditor's performance. So as an example, the health standards within a hospital might be of public interest. Depending upon the funding of that hospital and the impact that the funding of that hospital might have on those health standards, that wouldn't necessarily make it of public interest from a audited financial statements perspective. And initially, when we first the very, very first draft, you go back far enough, was it got hooked into the financial accounts it was the financial accounts which were of public interest. And a couple of our board members very eloquently made the point that they felt, rather like Ida did, actually it was wider than that. It wasn't just the accounts, it was more to do with what we came up with, which is financial condition, which is frankly, for want of a better term. And if anyone has got any really bright ideas as to what is a better term, I'm very happy to listen to them. When we put out the ED, there were a few people who said we would like some additional explanation, and I understand the perspective of adding in financial well-being. Is that an additional explanation? Certainly in some of our constituents' minds, it was. As I say, we will probably build something into the basis of conclusions as well. But that's a gestation for it. It is there to distinguish between things which are of public interest because of the impact it has on the role of the auditor and things which are of public interest for some other unspecified general purpose.
Billy?
Thank you, Tom. Maybe just based on the explanation that Mike has just given, I actually just want to ask Mike a question. So is it fair to say, because you said the difference in this instance is because of the focus on the role of the impact on the role of the auditor. Can we also say that it's because that this section, part 4A of the code, deals specifically with audit and review engagement? So it's specifically in the context of audits of financial or reviews of financial statements.
Correct. Yeah, very much so. And sorry, the discussion has been had as to at what point, for example, might you include ESG reporting in all of this? And I can see that in the fullness of time that may happen, as and when the role of auditors, whether they be professional accountants or others, gets clarified in relation to ESG disclosures. You might well then find there are things which are of public interest because of their ESG impact rather than their financial impact. And that might be a new category that is dealt with at that stage. But I think we'd be putting the cart before the horse if we tried to define that today, given the non-codification of the role of auditors within certifying ESG type statements.
Okay, thanks, Mike, for that context. That sort of was why I got comfortable with it. I do think we should be cautious about going beyond the scope of our audits standards today. But I don't know if anyone who voiced some concern earlier wants to respond. Edo?
Yes, thank you, Tom. And maybe because I've listened to Mike's explanation, and thank you for that, Mike. The way I approach it, and maybe I'm not, and I fully appreciate that the IAASB has their own due process and their purpose for their definitions. And I also support that we are as aligned as possible. But isn't the public interest in the financial statements? So that is a defined term. We know what the financial statements are prepared to achieve. And I've mentioned a couple of aspects before. And whether or not ESG will be roped in the financial statements at some point, that's what a separate standard setting process is for. And I maybe foolishly was under the impression that the financial statements, that is the subject of the interest of the stakeholders. We audit those financial statements to be transparent, to be used as a mechanism for management and boards to be accountable. And financial condition is clearly one of them. So don't get me wrong. It is important, but it's not as important as the definition currently suggests. And that so turning the focus more to the financial statements and the transparency that arises from those financial statements. And if I speak for my own territory, the Netherlands, there's a significant focus on fraud. And there's fraud, bribery, and corruption, where there's current standard setting out there that requires auditors in their auditor's report to report on what they've done on fraud. So you can equally then make the link to what particularly public interest entities need to disclose around that area. So in focusing it more on the financial statements, I think you allow yourself to not be pinned down onto a condition, in this case, financial condition. Thank you.
Thank you. Roger?
Yes, again, thanks, Michael, for that explanation. And we've had this discussion before a little bit, and it's had huge discussion, I understand, at IAASB. With it, again, this is applicable only to the audit of financial statements. So, those things you talked about are scoped out. So, again, it's a question of that. The fact that it's sitting under audit and review, as Willie has pointed out, means that those things are scoped out. So we don't need a qualifying. The other comment I wanted to come in was the fact that, things like, and you used ESG, I'll use the example of climate change. Climate change is quickly revealing its head in perhaps financial statement audits. And we do want to future-proof this. So, I don't know whether or not putting something just for the current context, even if that's arguable, is the right way to go. But they are views. You've heard those views. You've heard those views, I think, from your own board, from some members of your own board, and from some of your consultation, Mike. And so it's a matter of balancing in those particular areas. As I said, I don't see it as a fatal flaw, but it is, again, points for consideration. I don't know if there's anything in there that you haven't considered or haven't heard before. Thank you.
Okay. Right now, based upon what I've heard, is Mike has received, I'm not sure whether he would classify it as helpful feedback, but it has been feedback from our board in terms of some of the concerns. He knows, I think he probably heard it from his own board in task force as well. I think we could do nothing more than leave it as something for their consideration. What is really important in my mind, and Roger said it there, is based upon the IAASB due process, can we see this as not a fatal flaw if it were to remain roughly along the lines it does? And I guess I have to see is, it sounds like to me, with the exception of a few who have concerns, other people around the board table aren't saying that it would be a fatal flaw. Am I correct? I am getting, obviously, we urge the task force, IAASB task force, to give full thought to all the considerations that have been voiced. They're all important considerations, but I don't see this as a blocker for us pursuing or what work we would need to do to achieve some form of convergence with IAASB. Mike, back to you.
Thank you. So if we can go on to the next slide, which is just bringing up to date with where we are on the PI definition. And as I indicated earlier, we have, if you like, set out some very broad categories that we would expect local bodies to refine, and then obviously there's an expectation they would add. In terms of our original exposure draft, we had also put in post-employment benefits and collective investment vehicles. And the task force proposed in September, which was supported by our board and the CAGs, to remove post-employment benefits and collective investment vehicles. And as I said earlier, not because we think that a number of these should not be classified as PIs, but more a concern that in terms of asking local jurisdictions to refine these definitions, this would add a level of complexity that we felt on balance, it was better addressed from the bottom up rather than the top down. So in other words, for those local bodies to consider which of their entities they might add, because a number of countries may not add much, if anything, in this case, particularly around post-employment benefits. Depends what the nature of the post-employment benefit provision is in that country, rather than ask everybody to refine by taking things out. So as it says here, on balance, we thought it was more appropriate to leave those two categories. And we haven't added any new categories. If you go on to the next slide, I would say that the PIOB continues to have concerns about the removal of those categories. We had a meeting with the PIOB last week and explained our rationale. I think they took from that an understanding, but still they have a level of unease about the proposal. We are going to consider further what we might do, both in terms of bolstering the sort of the carrot, if you like, or the stick that we might use to encourage local regulators to add where appropriate. So particularly potentially building in something around application material. I mean, you will appreciate that as yourselves, we can't tell local jurisdictions what to do. We can only encourage, but we might look to further encourage. And obviously our board is going to have to consider the position and our rationale again in December, taking on board the PIOB's concerns. And that's all from me, I think, at this stage. If we go on to the next slide, which I think just any observations on where we're at with that.
Okay. Again, I think this question does a nice job contextualizing it in the context of our project regarding in relation to IAASB's final approval in December. Any observations? Imran.
Thank you. Yes. So in the context of our project, a lot hinges on this definition, because wherever this definition lands, it would have a bearing on the impact of the amendments we may or may not make to the ISAs. With that in mind, I like particularly the PIOB's remarks on this, and I share the PIOB's unease about the proposal. I think that at face value, the words are problematic and the deletions particularly are problematic, but from the perspective of our board, we have to ask ourselves, this narrowing of the definition, narrower than the ED, would have an effect in some jurisdictions of having almost no impact on any change we may make on the ISAs. We may carry this definition right through, and the ISAs would apply to the same category of entities. So with that said, I think the PIOB remarks on this are the ones that resonate closely with me. I wanted to place that on the record. Thank you.
Tom, thanks. I have two comments to question 4. I support the changes to the PIE definition, in particular, the elimination of categories little d and little e for the reasons noted. However, it is not apparent to me why category little f is needed, since the application of the requirements for PIEs in the code of two categories of entities defined by law or regulation as PIEs is a local matter and not a matter that needs to be defined in the code. The definition of PIE in the code should be self-contained and not refer to definitions elsewhere, which may vary. My second comment in this context is that it is unclear to me whether IASB and the IAASB use the same drafting conventions to distinguish between requirements and application material. I would like to point out that some of the application material in the IASB draft reads very much like hidden requirements, and request that IASB staff consider whether IASB drafting conventions have been appropriately applied. This has been my 2 comments, Tom. Thanks.
Thank you. Lynn?
Can't hear you, Lynn.
No, I finally unmuted myself. Good evening, everybody, and thank you for all these papers. I understand why D&E have been removed, but it is putting a lot of responsibility at a local level. So I just wanted to come in and support that if appropriate application material could be drafted to provide some support or guidance to local bodies, that would, I think, would be useful. So, which is 38F. Thank you very much.
Thank you. Roger.
Yeah, thanks, Mike. Look, I'm supportive of the changes that have been made. I think with Lynn, it is putting a more pressure on back at the national level. So the extent to which support can be done there. Understand the PIOB's views. But you know, there's such a variation, especially across jurisdictions in D&E. So you know, I think that's just an ongoing discussion, but would support trying to provide as much guidance as you possibly can for national jurisdictions as to what they add. Thank you.
Thank you, Roger. Diane?
Yeah, very consistent thoughts as Roger and Lynn. I think the approach of shifting this from the top down to bottoms up approach is appropriate. I think there is significant variability relative to how many entities we're talking about in D&E across jurisdictions. And I understand that we're pushing responsibility back to those local jurisdictions, but if we give them a good roadmap as to how to evaluate and they can quantify the portfolio or the population that would comprise D&E, I think they're in a much better position. So I'm very supportive of the approach. Thank you.
Thank you. Eric?
Thanks, Tom, and thanks to Mike and Josephine for the work that's been done so far. I'm basically sharing the same comments as others. In particular, I just was really struggling with F in terms of the way it was worded, and you know, it's sort of reference to meeting the purpose set out in 400.9, which I thought was just a list of factors, and so I wasn't really clear how this revised element of public interest entity would be applied by law or regulation or professional standards. So I support the comments about needing more guidance around that. Thank you.
Okay. I take a lot of the points. I guess my only concern about some of the comments that have been shared, I don't think it's for us to determine how IAASB concludes its process and how they're going to take the input from the PIOB. So I have a little bit of caution and concern. I get the points that people have from their own perspective as in other positions at the board, but I trust the IAASB due process as an independent standard setter with robust consideration to get to a place. The question in my mind is, does anyone have concern about the application of the PI definition based upon where IAASB is concluded, and therefore how it could flow to differential requirements on our board? Now, that's a different issue, but I do think it's really important for us as an independent board with our own robust due process to respect a similar due process and consideration at IASB. So I know the concern. So I would want to know if it were a fatal flaw in our consideration, but I do think that's an important distinction that should be made. And otherwise, I sort of leave it as input to IASB for consideration. And Mike did say they're having ongoing discussions on the removal of those paragraphs and the relevant materials that will accompany them. So if anyone wants to come in there as a response to my comment, please feel free, or I'm going to turn it back to Mike. Okay, I'm going to turn it back to Mike. Mike, any reactions to that?
Yeah, and thanks, Tom, and thanks for your comments at the end. I think it does have a bearing in the sense of, obviously, you, as you say, in looking at the work your board is going to do, need to be comfortable with that high definition. In that respect, I would just slightly contradict what Imran said and what a few other people have said in terms of the relatively increasing the burden on local jurisdictions. Let us not be under any illusions here. We are putting a significant burden on local jurisdictions, whether we're asking them to refine a top-down approach or to add through a bottom-up approach. And if they do the job properly, whether we have D and E in the top-down or we have strong guidance around the bottom-up, you should get to the same answer. The danger that we foresee is that there may be some jurisdictions, hopefully not many, that don't do a good enough job. And we see more dangers in that respect of leaving D and E in, not being refined or not being implemented at all, than actually putting them in the bottom-up approach. So it's all balance of the risk reward out of here. And one of the things I should have said is that in the discussions with the PIOB, it's become very clear that one of the things that IASB are going to have to do as a board at some suitable juncture is to do a detailed post-implementation review of this standard to see how people have actually interpreted it and brought it in locally, because that is key to the success overall. The other comment I would just make on D&E, which again, we will need to take forward and discuss with IASB at some point, is that if you think about a number of the independence type provisions, so not so much a matter for your board, but it's probably worth mentioning in passing, a number of the independence provisions that would kick in relation to defining something as a PI or not are around things like non-audit services. And in these particular categories, the non-audit services do not tend to necessarily be given to these clients. They get given to people who surround these clients. So investment advisors, pension scheme trustees, advisors, etc. And one of the things that we think IASB may need to take on board at some point is looking, if you like, at the same equivalent definitions the SEC has for investment company complex. So I'm not saying I'm particularly enamored of that definition. I know there's been a number of issues with that in the past, but it's a concept that I think we need to tackle with at some stage. But I'll stop there.
Okay. I asked Josephine, and that's very helpful, Mike. I asked Josephine and Mike whether it's a good moment to take a 10-minute break here. I think we're a reasonable way through the document right now, and I just sense that it would be a good time to take a 10-minute break. Is that an okay idea, Josephine? Mike?
Yeah, it's certainly fine with me. We've got transparency next, and that might take a little bit longer. So yeah, that makes sense. Mike?
Happy to do that.
Okay. So we'll take a break. Half past the hour, we'll reconvene. Thank you, everyone. Good discussion so far. Okay, let's try to get back. Okay, give maybe 30 more seconds for people to restart their video. I hope everyone got a fresh cup of coffee or tea or whatever you needed. Okay, Mike, is it you or Josephine coming?
It's me for a couple of slides, Tom.
Thank you.
Okay, so the last bit I wanted to cover is just where we are on the transparency requirement. And again, the board at its last meeting and the CAGs have supported our proposals, the task force, to take the firm requirement that we had in the ED to determine if additional entities should be treated as pies back to application material as encouragement. They were also supportive that we retained the transparency requirement. We have tried to make that clearer, that what we are getting at is that when pie independence requirements have been applied, then that's what needs to be disclosed. So it's not treating things as a pie for anything other than the independence standards. We have, in the text that we have drafted, which we'll come on to in a second, it's been intended to avoid giving any direction on how the disclosure should take place, on the basis we did not want to impinge on your due process to explore whether disclosure in the auditor's report might be suitable. We do believe, however, that it is in the public interest for users of audit reports to be able to know which standards of independence have been applied, i.e. whether it's the PI independent standards or the non-PI independent standards. And therefore, we do believe that given that heightened expectation, we believe that's best achieved by public disclosure. We have also done some very minor revisions to the list of firm factors, which I wasn't proposing to cover. So if you want to go on to the next slide, we are still considering further refinements in terms of paragraph 400.17a1. And that was really to try and ensure that we didn't end up, if I can put it like this, in terms of having more than one category, in the sense of there would be things that a firm would apply the independence requirements to, but weren't actually pies. So we do see those two as linking, i.e. it's you believe that something should be treated as a pie for the purposes of applying the independent standards, therefore you then apply them. Not that there is a list of pies and then in addition the firm considers other entities which are not pies, but which it thinks the independent standards relating to pies should be applied to. We see that it is determining that for the purposes of independent standards, at least, it is indeed meeting the criteria as a pie. So we're just considering some slight refinement around that paragraph. In terms of 400.18, you can see what the current draft of that is looking like. I'm very happy to take feedback on that. A couple of points have been raised, which we will take on board. So I know there was a concern raised by some as to what are the implications, particularly if it does go into the audit report, if the audit report is not made public. We can think about how we deal with that. I have to say that the concept of something being a public interest entity where the audit report is not public, I'm kind of curious as to know what entities might fall into that category. And clearly, if the audit report is not public, it would seem that the stakeholders are not interested in what the auditors have to say, or at least the public is not interested. And therefore, the same people who would see the audit report would be the only ones who would be interested in what independent standards have been applied. So that point we will think about. And there was also a slight point raised by one of our board members about if the firm determines something should be treated as a pie because it is proposing to list, might that be giving away confidential information if they then publicly disclose they've treated it as a pie? So we'll reflect a little bit further on that. But that's where we have got to. So if you want to go on to the next slide. And over back to Josephine.
Yeah, thank you very much, Mike. So in terms of the transparency requirement, as a recap for our board, there was generally support to explore transparency in the auditor's report. And as Mike has already mentioned, we've obviously been doing our job properly in the background. A couple of matters that were raised by our board for IASB PI Task Force to consider was how would disclosure in the auditor's report meet the requirements in 418 to publicly disclose if there is limited distribution or access to the auditor's report, but Mike's already commented on that. And of course, how will IASB address the matters of confidentiality as well? But as noted in paragraph 6, if the auditor's report is not found to be a suitable location, then this will create uncertainty as to what mechanism can be used. And that's also a point that the IASB task force, PI task force, have agreed to take away. I mean, essentially, there could be something explained in the basis for conclusions, and IASB will consider the need for any further action once we, of course, have finalised our work and deliberations on that matter. Michelle, if I could have the next slide, please, which of course brings us on to question number 5. So given general support to pursue a project that will explore transparency in the auditor's report, are there any further observations the board has in respect of the requirements that would be relevant to the IAASB's project or in supporting IASB in finalising their work in December? So Tom, actually back to you.
Thank you, Josephine and Mike. Okay, question 5. Any comments from the board? Isabel.
Yes, thank you. So thanks to the ISBA for having addressed many of the comments that were raised regarding the fact that PI does not only apply to independents. It does apply also to other parts of the rules applying to the entities, including corporate law that may have some specific requirement for PI. So now I understand that we would say somewhere to be defined publicly that as auditors we have applied the PI requirements for an entity that is not a PI, but we have not. So we have applied the PI requirement for independence, but the entity is not a PI, and therefore they have not applied the PI requirements in the corporate law. So it's complex, but at least it's clear, and we will have to find the right wording to avoid any misunderstanding from the reader. But listening to the comments that were made, I wonder whether we do not miss something in the definition of PI, because I understand that you consider that the audit report on a PI will always be public, which may not be always true, but maybe before that, it means also that you consider that the financial statements for a PI have always to be public. And we don't have that requirement in the definition of PI that the financial statements have to be public. So before having the audit report public, I think the financial statement should be published. So it's a discussion we never had, I think. So I would be interested to hear about you about whether the financial statement should be public. Thank you.
Thank you, Diane.
Yeah, first of all, I agree with Isabel. I was thinking that would be something maybe too aggressive, but some way to deal with the question as to whether the financials are public or not is building into the requirements that the PI financials be made public. I encourage you to think about the confidentiality element. IPO market is extremely hot right now. There are a lot of transactions going on. So I encourage you, as you've got on your to-do list, to look at the confidentiality. And then the third one, little bit elephant in the room, which is what is disclosing what independence requirements are following due to the stakeholder. I guess we're assuming that the folks reading these financial statements are sophisticated enough to know the difference between the independence requirements of the different standards such that that disclosure is meaningful to them. I just question that a bit. So I go back to the fundamental of what does this do? And is it accomplishing and filling a gap that we think is needed? Again, I'm just not sure the user will appreciate the differences of the standards and say, aha, okay, you're following this standard. So I know that that means A, B, C, and D versus E and F. And so I go back to just, why is this an important element? Thank you.
Thank you. Julie?
Thank you. And Diane, I am in complete agreement with what you just said, so I won't repeat those points. But when I was reading this section of the paper, I did get to these paragraphs, I think it's 49 and 50, where the task force starts to outline some of the challenges that are going to occur. And I couldn't agree more that those are going to be the challenges. And I do think that the topic of whether something is publicly disclosed will be a bit of a challenging one. And I think when jurisdictions also start to modify or add or make changes to that list of pies, it could very well be the case that a lot of those audit reports and financial statements are not publicly distributed. So I do think that's a real issue. So it will be an interesting one to work through. But I guess, Josephine, on the question itself, I'm a little bit, and I have no problems with the principles here, but I'm a little bit concerned with the timeline. And I know we're going to talk about timeline later, but there's a real connection point between what's going to go in the IAASB code and then what we'll have to do from our side. And having the IAASB piece run that far in advance of our deliberations and our due process concerns me a little bit, because I think we're going to have to work through this. And I think all the issues that have been brought up are going to be real issues. And I'm just a little bit concerned that connection point will cause us some issues from a timing perspective. So I just wanted to raise that in particular here, because I think I just think that having something approved in December on one side, when there's such a strong connection to what we have to do, on our side, could be problematic. Thanks, Tom.
Okay, Eric.
Thanks, Tom, and share the concerns raised by Julie just now, and we'd not underestimate the challenge in developing the reporting requirements on this. A question I just wanted to raise, though, was with the actual wording of our 418, because I wondered if it could be misinterpreted, or if if it's open to different interpretations, because it doesn't really seem to say that the firm shall publicly disclose for that audit client that the firm has applied the independence requirements for PIEs. It just says disclose that fact, and I wonder if people could misinterpret that as simply saying a very general statement that for all public interest entities we've applied the independence requirements. So I just raising that as an observation about the proposed wording that's been provided in the papers. Thank you.
Thank you. Ida?
Yes, thank you, Tom. I would echo a lot what Diane and Julie have mentioned. So and I think the working group is on point to be concerned about how to apply publicly disclosed. So and Isabella's a fair point. So if it's not important that the financial statements and the auditor's reports need to be publicly disclosed, why do the audit firms then need to go further than what the requirements for the financial statements or disclosure of the auditor's report would need to be? In respect of, so you wonder whether just including it in the auditor's report would just be a sensible solution and be done with the publicly disclosed. I also struggle with the timing element that Julie mentioned, and I am not sure if this is the right forum for it, but the IAASB could, of course, also consider to adopt, with the exception of this publicly disclosed element, to defer this to align with the timing of our project, as a suggestion out there that may also address Julie's concern. Thank you.
Thank you, Sue.
Thanks, and probably similar to others, I had similar comments around the publicly disclosing, and I thought the suggestion about the financial statements being public is actually a really good hook to think about this. I also had big concerns around the timeline, so probably similar to what Julie expressed. I do think it's really important that when the standard is effective, there's clear guidance that carries the appropriate weight as to how that requirement, the requirement for transparency, has to be met. So, I mean, firstly, I think there was a reference in the paper to staff guidance. If it wasn't going to be the audit report, then maybe some kind of non-authoritative guidance. I don't think that would be appropriate. I think it's important that it is guidance that has gone through the appropriate board due process and carries that weight. But I think also when we looked at this previously, there have been quite mixed views around the transparency element, and I think we need to make sure that we give the appropriate time and due process and listen to what's been fed back around transparency. And so I think it's well, I suppose it's just important that we give that due time, due process, and work that through. And I appreciate that the answer to one of the questions was along the lines of if certain requirements are put forward, then is the audit report the best place? But I think the previous question had got far more mixed responses in the consultation around transparency, and obviously we need to make sure we're taking into account all that feedback. So I think in summary, it's, you know, there's a lot to address there. I think the timeline is really important because practitioners need to know exactly what it is that they need to be doing. So if there's a way we can work together on that, that would be great. Thank you.
So a couple of things before I see other hands up, but just to clarify, I've heard some people pointing out a lot of issues potentially for consideration, but no one's suggesting, as I could hear now, that we shouldn't go ahead and consider it, which is a big point. We're hearing a lot of the things, feedback that we would obviously heard in the previous consultation. And I think my understanding, Josephine, the task force or the working group would fully need to consider that through our own independent due process to change the standards. Am I reading people right that you're just highlighting, you're not saying that we shouldn't consider it, but you're highlighting issues that would be considered, and some perspectives are that it may be more challenging than we would perceive right now? Is that a fair estimation? Okay, I just wanted to make sure that's a different thing, that we shouldn't be doing it whatsoever. And I just wanted to make sure that we were reading it. I think the timeline question is a separate question, and we could talk about that separately too. So I'd rather talk about the substance of pursuing ahead and then issues related to timeline as a separate topic too. Okay, Kaiue?
Tom, thanks. It seems to me that a proposed requirement to publicly disclose the application of the independence requirements for PIEs may discourage auditors from applying these requirements voluntarily. Furthermore, by not explaining how auditors are to make such required disclosures outside of the auditor's report without violating legal confidentiality requirements, it seems to me that IAASB is de facto forcing the IAASB to include such a requirement for the auditor's report. It's in my view that disclosures by auditors to users, including the public, by any means whether for independence or other requirements, is actually within the remit of the IAASB, whereas the independence requirements to be applied is within the remit of the ESPA, which has previously not addressed any disclosure issue outside of NOCLA. For this reason, I believe the ESPA should complete its project on the definition of pi without the requirement for disclosure until greater clarity can be obtained by the IAASB about the implications for this report and what the other disclosure possibilities for auditors are given legal confidentiality requirements. That's all. Thanks.
Thank you. Fernando?
Thank you, Tom. And as I said before, the project is now critical in terms of my jurisdiction and the rest of the countries. And I do see a lot of people being confused of what we really mean in terms of independence requirements for PIs. I don't think they will really care at the end. They just are concerned, are you independent, yes or no? It doesn't really matter what requirements we're applying. And I do see losing value going forward and becoming just a boilerplate disclosure. Thank you.
Roger?
Yeah, thanks. I was unsure whether or not to take my hand down after your summary, Tom. I'm fully supportive of the IAASB exploring this. I do see there will be a number of issues that we need to work through in due process. This was not an agreed position on the feedback to IAASB as to way forward, and there's a number of time things. So you said we'll defer discussion on timeline, but I do see that as a critical element. Thank you.
Okay. I see Jim had to jump off the call, Dalgan, but I would want to reflect that a number of practical concerns have been raised regarding this. But one of the things that I heard in CAG's discussion on this topic was strong support, particularly from the investor community, for such a type of disclosure. And I just wanted to bring that. Diane raised the question of who wants it. You know, of course, we don't have a hugely diverse cross-section of the investor community, and that they are diverse. And we would clearly need to do quite a bit of outreach as part of any project. But from what we heard at the CAG, there is some demand, at least as expressed at the CAG, for this type of disclosure in the auditor's report. So I just wanted to add that balance to the discussion as well, just because the question was who's demanding it. I take some that resonates with me a bit as well. But again, I think I summarized what I thought where we were headed on the substance of whether to consider this and explore it. And then the question of timeline is a real one. I don't know, Mike or Billy or Ken, if you're still on the call, whether there are other instances of public disclosure in IASB's code too, as well, and that may give some comfort as well. So either I'll let Josephine, Mike, Ken, Billy jump in as you see fit.
Perhaps I'll start, Tom. I mean, there clearly are other elements. I mean, the fees project has asked for public disclosure as a default option if clients weren't disclosing fees. I think in respect of this, and to answer some of the questions, at the moment, your code goes part way to saying what independent standards have been applied in determining whether an auditor is independent, because you ask for the jurisdiction or reference the IASB code. You could equally take the point that what's the odds of an investor really understanding what that means? All I think we were trying to do here is to say that to the extent that there are stakeholders out there and have a public interest in this particular entity, those stakeholders should be aware of what independent standards have been applied, so that if they want to ask questions about that and or probe it more deeply, they have the ability to do so. not be kept in the dark because they actually don't quite know what independent standards have been applied. So in some ways, it's not doing any more than that. I do understand the point about would it put people off applying the independent standards. In some ways, again, though, the way the IASB board has approached this and the way the task force approach it is almost the other way around, which is if we did not pursue, which we have agreed not to pursue, the idea that firms should be required to form a view as to whether there should be additional entities added, this provides a lens into what firms have actually done, which otherwise the public, the stakeholders are not aware of. In terms of the public disclosure of accounts or audit report, I mean, given the criteria we are that this is of significant public interest, and therefore you expect the public to be interested in the financial condition. As I say, I'm not sure there'll be a lot of financial statements that aren't in some way public or audit reports which are not made public for things which are sensibly regarded as pies. But we could potentially look at, and I've been mulling this one over a little bit, we could potentially look at a disclosure requirement which was linked to the stakeholders who had sight of the financial statement stroke auditor's report. Because clearly if they don't, they've got no interest in what it says. But those would be my comments at this stage. Timing, the board, I don't think at the moment, and obviously we will raise the points in December, I don't think our board is inclined to delay the timetable, given this has a long lead-in time, which we think would have ample opportunity to better refine, if necessary, where that disclosure is made.
Okay, thanks, Mike. Josephine, would you like to add any perspective?
Well, I think Mike's covered it. I mean, clearly the IASB were made aware of what I see are the two critical issues, the publicly disclosed and the confidentiality issues. And IASB PI task force, as Mike also just said, are thinking about it and how to address it. And in terms of Diane's point and also Fernanda's point to, boilerplate, obviously, in terms of boilerplate, we'll have to be very careful about what we do from our own project perspective. But at the end of the day, I don't see those two issues. If they can be resolved by IASB and they have till December to think about that, then I don't see those as actually causing us great stress in terms of our timeline. But we will actually talk about that a little bit as we come across the next few slides anyway. But no, nothing further to add.
Okay.
Okay. So
I think we can progress.
Yeah, okay. So Michelle, if we have the next slide, please. Give Mike a little bit of a relief here. So we're now into part B of the agenda paper. And as mentioned earlier, the purpose of this part is, of course, to progress our discussion on the development of a project proposal so that we're actually in good shape in March to actually seek approval for that project. Now, this slide hopefully demonstrates how the different pieces of the project proposal actually, or the project proposal jigsaw puzzle, if you like, actually fit together. So first, the working group considered the public interest framework, which we've already seen through other projects, and paragraph 82 sets out the stakeholder interests as described in that framework. So we're not going to talk about that in great detail. We do recognise, however, that there's a little bit of work still to do on potentially the interpretation of those stakeholder interests and how they connect particularly to our key public interest issues. And to that point, staff across the fraud, going concern and PI working groups will be working together in the background to make sure that our use of the public interest framework and how we pull together this jigsaw puzzle is actually consistent across the project proposals that you'll see coming up next year. And at the end of the year, in fact, the end of this year. Then we have our key public interest issues that are developed specifically for the PI project, and a table in paragraph 83 highlights those. I'm going to cover some of those off a little bit later. And then all of this feeds up into, of course, the scope of the project and then the project objectives. One thing I will say is that because this is a narrow scope project, And there is repetition in the matters that we have to think about in terms of scope and the objectives, but we can chat about that as we go through. But if we could start with a scope, as actually that was the order of matters in the issues paper, which means if we could move on to the next slide, please, Michelle. Thank you very much. So there are actually two considerations for the scope of the project. The first is which IAASB pronouncement should be addressed in this project. And as you'll see in the issues paper, the working group concluded that actually the narrow scope project should be limited to ISQMs and ISAs. So not extensive to the framework for audit quality, where we see lots of examples for listed entities, or certainly ISRE 2410 at this time, because potentially that's a project we'll be pursuing in the future anyway. And then the second consideration is what are the various matters that the IAASB actually need to consider in order to pave the way to convergence between the concepts in the code and our standard as far as we possibly can. So as discussed and agreed in July and discussed today, as well as establishing an overarching objective to be used by both boards, we also need to explore the development of a tailored objective for our standards, notwithstanding, one board member did mention whether in fact that was actually necessary. So we have to take that on board. And then these objectives, along with any guidelines, will be used when undertaking a case-by-case approach for any future considerations by the board in determining whether differential requirements are necessary. We also need to consider whether to adopt the publicly traded entity and PI definitions as part of achieving that object convergence. And as I mentioned, in respect of PTE, it's not actually a simple swap over of terms. We do actually need to do an analysis as to the appropriateness of that term for our standards. And irrespective of the case-by-case approach, we need to consider the adoption of PI definitions, as I say, for other reasons, such as the enhanced communication in the auditor's report, and whether it's contemplated, of course, that differential requirements could exist for PIs in the future. Now, of course, it's also very important to carry out the case-by-case approach, as we've already agreed, as to which differential requirements that currently exist should be expanded to PIs, and of course, whether enhanced communication with users about independence is appropriately placed in the auditor's report. If we could go to the next slide, please. In fact, so we're here to our first questions on the project scope. So in terms of these two scoping matters, the standards and scope and the path to convergence, firstly, does the board agree that the IAASB project be limited to ISQMs and ISAs, and have the various matters that need to be considered as part of the scope of our project been appropriately described? And that's all set out in detail in paragraph 62 to 81. So Tom, back to you for comments on the scope, please.
Thank you. Okay, this is just on scope, not at the methodology of achieving that scope yet. That's the next area. So scope, question 6 and 7. Kai Uwe.
Thank you, Tom. I have two brief comments. First to question 6. I agree with the IAASB project to be limited to ISQMs and ISAs. And also very brief comment to question 7, the various matters that need to be considered part of the scope of the IAASB project have been, in my sense, appropriately described. However, in applying the case-by-case approach, the public interest impact on the categories used by IASB to define PI on auditor reporting and quality management need to be determined. That's all. Thanks, Tom.
Okay, so that's broad support, but a caution of when we apply the case-by-case approach. Julie.
Sorry. For question 6, I was in agreement with the scope that was outlined in the paper. And for point 7, I thought the matters that needed to be considered were complete. I didn't have anything that I thought was missing. But I think the point that's made in the paper a couple of times around setting out the guidelines and I'm going to call it the rules of the road, but you called it guidelines in your paper. But I think that's going to be very fundamental and key. And it doesn't just, as we know, this doesn't just affect this project, it will affect future projects. And so it just made me wonder that we've stressed that enough as I'll call it the starting point to where we need to get to, so that when we do work through the case-by-case approach, we're reconciling that back, I guess, to some fundamental agreement on what those principles are for when we change something or when we don't change something. And so it just made me wonder, is that piece of this a little bit bigger than as I read it in the paper, but I'm sure the task force has considered that as part of their deliberations as well. Thanks, Tom.
Thank you, Julie. Sue?
Thanks. So I probably had a question on number 6 around whether we should be looking to include the ISA suite because of the focus on sustainability or climate change or that whole kind of area at the moment. I think if we ultimately choose not to include that, it's going to be important that we have a very clear roadmap and we're quite transparent about what our intentions are there, because Mike referenced it in his discussion that it is clearly becoming more and more focused. So as I say, my preference would probably be to include it, but if not, I think we need to be very clear on what's going on. And then on question 7, I think what you have there is very comprehensive. My only point to raise really is around in the issues paper, it doesn't really address what happens if ultimately we conclude that the auditor report either isn't an appropriate mechanism or there are other mechanisms as well. And I think at this stage, given that we're going to be looking at the various options, we should be open-minded as to what the various outcomes could be. Thank you.
Thank you. Peter?
Yes, thank you, Tom. In respect to question 6, I agree. I like it to be a narrow scope project, and in respect of question 7, I think that is rather comprehensive. The matters that need to be considered. I may even caution the working group not to let the scope creep for the narrow scope project. And I had some questions with respect to 71, paragraph 71, and whether that really needs to be part of this project. So something to consider, and that's all for me on these 2 matters, Tom. Thank you.
An urge for discipline in some way. Imran. Imran, you're on mute, I think.
Am I back? Josephine, thank you. I thought that your description in this opening slide was actually brilliantly laid out as to how this will all come together in project proposal next March. And as a consequence, I am in agreement with both of your proposals in paragraph 6 and 7, or in question 6 and 7, with 3 comments though. And the first is that as we think about our approach and strategy as a board to an agile project, one gets the impression that has informed our thinking as to how we're tackling this project. I'm particularly interested, Josephine, what are we gaining by taking an agile approach to this, or what are we losing? Because my sense is that by keeping the scope narrow, this is describing an agile project. So, I'd like some kind of comfort that we're not losing something really important, which would take 1 more quarter to get done. The second one is paragraph 75 describes this process. And you cover it here, you cover in the appendix really nicely. But I think that Julie spoke about rules of the road, as if there's something that this process needs to be wrapped within. That after we consider this, how are we actually going to make a decision? And so I worry that we may spend 6 months on this or a year on this and come down later on, we're still going to have pros and cons about transparency being the conversation, even after having considered everything that you have in paragraph 75. And I think a more forthright conversation in the board now may help decision making down the road, make it a little bit easier. Lastly, Josephine, and I was there at the start when several of us were there at the start when we spoke about these projects originally and tried to align with IAASB. Is it possible, Josephine, that somebody who's been watching us over the life of this coordination effort may conclude that our involvement with IAASB presupposed our willingness to adopt everything that came out of their project? Because, our intention was well-meaning, we were closely aligned, we recognized that we're independent boards, but that this is the reason why we had these two particular members from our board observe the work of their task force. And if it was our genuine intention to be closely aligned so that we would adopt, there is language in how this project proposal is building up that kind of gives us a get out of jail approach. And so when we discuss concepts such as we may have a different rationale for our decision making, or we may want to align to the extent possible, it would seem like we may be laying some safety nets, that despite our coordination, there's still areas in which we're going to divert. And I wonder what kind of guardrails we place around that level of judgment. How do we make sure that, in fact, our original vision that we want to give users of both of these standards, the independent standards and the audit standards, a consistent approach to dealing with this world, and not to be bugged or weighed down by some complexities that we as board members have thought about that creates this diversion in the world. So very much supportive of what you've described in the scope, but really offering those three thoughts as you reflect on how the project will progress after today. Thank you. Or when it becomes a project.
Thank you, Imran. Roger.
Thank you. Question 6, agree to limit it to ISQFs and ISAs, scoping out our ISREs for the reasons given. Question 7, again, I think I couldn't identify anything else to be considered. I think this is a great narrow scope amendment project. I think we will learn. I think we'll learn the rules of the road as we go. But it's a great project to take that along. So I have nothing else to add. Thanks.
Thank you. Kai?
Thank you. On 6, I agree with the scope as set up by the group. On 7, I share some of the cautions or concerns, as Julie did, on the guidelines on how to perform the case-by-case studies, and to avoid what Ido expressed as the scope creep. So we actually keep it to be a narrow scope and be clear on how to do the case-by-case basis. So thank you.
Thank you, Kai. Yosh.
Thank you, Tom, and thank you, the Josephine and Michael and working groups. It's very helpful to read, and we could grasp the past deliberations of the PIs. And I have 2 comments about the matter 7. Of course, we support the question 6 and matter 7. When considering extending the scope of application of the IAASB specific requirements from listed entities to the other categories of PIs, it would be necessary to conduct sufficient outreach because the current situation in which each jurisdiction has a wide variety of business types, and the definition of PIs should be appropriately considered. And from the viewpoint of regulator perspective, based on the case-by-case approach, if the definition of PIs might become narrower in any jurisdiction due to the broadening of the scope of application of the IAASB specific requirements, it would be against the purpose of the revision of the PIs definition. So we'd like the board to be careful not to take any action in each jurisdictions that would be contrary to the purpose of such PIs definition revision. That's it. Thank you.
Thank you, Yosh. Isabel.
Yes, thank you. On question 6, I understand that the scope and purpose of the IAASB project is to align on what ISBA has done. And so I note that the changes that we are looking at in ISBA code are in part 4A, that relate to independence for audit and review engagement. So I think we should stay there. And if I understand well, but I'm not sure if we can take this conclusion, PI are just defined for audit and review engagement, and they are not defined for other engagement. So I agree that we align ISQM and ISAs. I found the point that Sue raised was really interesting, saying it would be relevant to ISAE, but I think it would go further the scope of the project, which is just to align. And so if we align for audit and review only. And then looking at ISRE 2410, I think it reinforces the need to modernize these standards for many reasons, and the alignment would be just one of them. But I understand it's a different project. And on 7, no specific comment. I agree. Thank you.
Thank you. Okay, Josephine. So you got some advice about how we would pursue the project. But broad support for the way we're going on 6 and 7. And so I take Edo's comments. I really make this a narrow scope amendment project, not worry about scope creep. So there's the disciplined caution is probably the most robust thing I've heard.
Yeah, thank you very much. I'll sort of work in the order I can see them on my paper here. Yosh, your point is spot on. It will be necessary to conduct sufficient outreach. This is going to be part of our due process, so there will be an exposure draft, there will be a public consultation, and also we will obviously build in other outreach activities as we go through that process. So that's very much the case. So hopefully that gives you some relief from that perspective. Imran, we have heard a couple of times today that we have to be careful of the risk of adding additional complexity to our standards and then misalignment with the code. So it is very much still what I'm hearing from the board in their mind that we do wish to align as far as possible, but there may be situations where it's just not appropriate for our auditing standards for the audit of a particular entity, for example. Julie, rules of the road, yes. Apologies that we didn't really make too much of the guidelines, but they are very much in our mind as to building those in as well as part of the objective, or certainly in extending or understanding the objective, including our tailored objectives. So, apologies we didn't build that out. We haven't really put much thought into what exactly that would look like at this time, but certainly that will be part of the project. Sue, I agree with you. At some point down the track, we may need to think about whether we need differential requirements in those standards. But for now, we really are just focusing on what we have in existence today in terms of differential requirements. But I guess to Julie's point, that objective and those guidelines will be used hopefully later down the track. So that's very much in our thought too. And I think there was a caution also on paragraph 71, Ado. Thank you for that. Yeah, I think that's it actually. Oh yeah, and yet another plug. Thank you, Isabel, for us revising 2410, which personally I think is dire need for it. So thank you. Right, Michelle, if that's okay, Tom, we can probably move on to the next slide.
I just make the point on 2410, if someone could create more time and resources for us all, then I'm all for it. But it's sort of get in line at the deli counter right now.
Yeah, agreed, understood. So public interest issues, slide 23. So looking for some feedback on those. So they're set out, as I said, in table 83. Now, the first public interest issue we think is to achieve convergence. We've just been talking about that between the concepts used in the code and the IAASB standards in order to minimize complexity and enable greater consistency in application. We thought in this particular instance, the most relevant stakeholder interest here related to promoting consistent practice. Then we have public interest issue number 2, which is sort of where we started. We felt that addressing the differential requirements in the standards to meet any heightened expectation of stakeholders regarding the performance of engagement, although tricky to align, we thought it was more in line with driving effective measures to respond to the related risk of the audit of that entity. So it's about those heightened expectations. So we aligned this with category B. And then finally, number 3 is more straightforward. That's enhancing transparency about the relevant ethical requirements for independence in conjunction with the code. And that's aligned with category D, which addresses transparent reporting. If we could move on to the next slide, please, Michelle. Fantastic. So here we have our project objectives. And of course, they're the outcome or objectives that will be achieved through addressing the key public interest issues for the matters identified. And again, as I mentioned earlier, I do believe because this is a narrow scope project, they are very much the same as the matters that are considered in the project scope. However, I do still believe that, or we still believe that those are the objectives the project is trying to achieve. So I won't cover too much more on those. If we could have the next slide. Okay, so we're on to board feedback. So this is questions 8, 9, and 10. I think we'll probably do all of these together, Tom. So are the public interest issues relating to the IAASB project appropriate? And don't forget, we obviously get another stab at this. And are there any other public interest issues that the PI working group should actually consider when they're developing the project proposal? And of course, have the project objectives been appropriately described to address the public interest issues that we've identified? So Tom, back to you then, please.
Thanks, Josephine. I'll take comments on this. If you have signs of support, you could show your support by physical hand too, but welcome comments. Imran.
Thank you, Josephine. I really appreciate seeing this at an early stage. I think this is wonderful, and it's a reflection of how our board is already putting in place the monitoring group proposals around the public interest framework. So grateful to have a look at it and appreciate that we may have yet another opportunity to look at it later. 3 or 4 comments about it. The first is that if we track this back to the public interest framework, which has 4 categories, A, B, C, and D, we've mapped these to 3 of those 4 categories. I have a view that category C would apply to all of these public interest issues. And maybe that's the reason why you haven't inserted C or put a cross next to C. But a column or footnote may make the point. And category C is any one of these would help to reinforce the professional accountant's role and mindset and their skepticism in gathering evidence. Imagine if they've got to make disclosure of some of these things, how they could change behaviors. The second comment is the use of the word explore. The word explore is used throughout this public interest, throughout our development of this public interest framework. I think there's 4 or 5 usages of it, and in one of them is actually a double usage. I think that explore is pretty nuanced. It's not bold enough. It kind of says, we could do this and end up not doing anything. That's what an exploration could lead to. And I think that a public interest framework has got to be goal-oriented. And a goal orientation would be about the achievement of something. Just as how some of the column 1 descriptions describe achievement. It's not simply a case of replacing the word explore with achieve. I appreciate it may need some reworking about how the issue will then be addressed if achievement or some other word is used in its place. But I offer that to you because I think that explore is still at the area of let's talk about this and we can get to the end and not do anything and still have achieved the public interest issue, which is not our intention, of course. We're not planning to do that as a board. We're planning to make great strides in alignment here. And so I'm encouraging with the use of some other verb in place of exploration. Those are my my two comments. I appreciate that this is hard. It's something we're doing for the first time. So really appreciate what we're doing for the first time in this group. So really appreciate the effort that we're putting into it here. Thank you.
Thank you, Imran.
Yeah, and if I had to answer question 10, my answer is yes. Thank you for that also.
Thank you. Julie?
Thank you. And Josephine, I was in agreement with what you had with respect to question 8 and 9, so I don't have anything additional to add there. My just one reflection on your question 10, and it came in the project objectives little d, and I just wondered if we may want to think about that in a bit of a using stronger words than maybe support, because I think if I understand it right, IASB has sort of laid out the what needs to happen, and then we're left with the sort of how and when potentially. And so I viewed that as a little bit more than supporting the efforts for transparency, and maybe more aligned to how A, B, and C are written, which is a more actionable item. So I just wondered if the task force might think about that a little bit. Thank you.
Thanks, Julie. Okay. If you haven't raised your hand, I'm assuming that you're in full support of 8, 9, and 10, unless you raise your hand at this moment. Okay. Josephine?
Julie, please go ahead. No. So Imran, on the on the skepticism pith, as it were, we did think about it, and actually to some extent we didn't feel that the key public interest issues were sufficiently granular to actually support that stakeholder interest. Having said that, and to the point that you make about, well, in terms of delivering an auditor's report, would that change one's behaviour if one is disclosing information in the auditor's report in a certain situation for a certain type of entity? What we'll do is we'll take it back, and also when I said earlier that we were gathering together our thoughts as various different across various different projects on how these should be used, we'll put that one into the mix as well as to how we should use that. But that's a fair point. As I say, we did think about it. We just didn't think it was appropriate for this particular narrow scope project. And yes, thank you, Julie. We'll certainly look at the wording and to that sense, start again. And to that point, we'll look at the wording for that last objective, and actually, Imran, we'll look at the wording in terms of where we've used explore and if that's appropriate. So thank you for that feedback. That's helpful. Okay, so Tom, I can move on to the next slide.
Please do.
Okay, thank you, Michelle. So in the PI ED, IASB proposed that the effective date would be December 2024. And that has received broad support from their stakeholders and continues to receive broad support in their meetings. So in developing our initial timeline, so this is our initial considerations around this, we thought that the IAASB objectives could be finalised in time for a 12-month implementation period. So working backwards, that would be September 2023 IAASB approval, and then it would be a PIOB December approval. But having reflected on this, and particularly all the issues that we've discussed today, 12 months in our view is probably insufficient times. Well, firstly, for firms to potentially effectively implement any changes to the scope and the differential requirements. For example, if we were to change the scope of EQRs, for example, that's a lot of work, effort, training, etc. And in addition, the working group felt that March to September may in fact be insufficient time to effectively perform a case-by-case analysis, particularly given we also need to consider the impact of moving from listed entity to publicly traded entities. It's not, as I said, a simple swap over of terms. In trying to align with the IASB effective date, and this has already been mentioned by the board today, the working group do recognise that the urgency in aligning effective dates is actually only really in relation to the transparency requirement and not necessarily the case-by-case analysis. And to that extent, it's particularly important when thinking about the situation that was raised where the board and its stakeholders concluded that the auditor's report was not an appropriate mechanism. And this is answering a question that came up as well. So in such a situation, we've agreed that IAASB will work with IAASB, and IAASB will need to consider the next steps in good time for them to support auditors who are applying that transparency requirement when it becomes effective. So with this in mind, the working group thought that we actually needed a more agile approach to deal with the more urgent aspect of the project first, and taking more time to address other aspects of the project. So if we could move to the next slide, please, Michelle. So in considering the need to be more agile, as I say, we put to the board 3 different options, and paragraph 88 sets out the pros and cons of these options in more detail. Option 1 is your classic do nothing or no change approach. So it's the original approach that I've just outlined on the previous slide. We have our project proposal as a single package approved in March, fingers crossed, with the intention of finalising our proposals by September 2023. Option 2, again, we have our project proposal as a single package in March, but we carve out that work in respect to the auditor reporting piece on a faster moving track. And that would be to align our outcome then with the IAASB effective date. Then we actually address the other proposals in the project, including the case-by-case analysis on a slower moving track with a later implementation date. Option 3 is rather like option 1. So we have our project proposal as a single package approved in March, but with the intention of finalising our proposals by September 2023, but with different effective dates. So essentially you'll have the auditor reporting piece in time, but maybe a later implementation date. Of course, that runs the risk of what I was just explaining about it doesn't give enough time for implementation, and it doesn't give enough time for an appropriate case-by-case analysis. So if we could move to the next slide, please. Michelle, next slide. Thank you. So before we get feedback on the project timeline, there was just another matter the working group wanted to obtain the board's feedback on in respect of those IAASB requirements that would be most impacted, if they were to be, by any transparency requirement in 418. So essentially, and this is all explained in paragraph 90, it's the working group's view that if we were to propose any changes to any statements in the auditor's report, we probably need to also explore, sorry, Imran, I've used that term again, but we probably need to also explore potential amendments to ISA 260 as shown on this slide, because it's the communication to those charge of governance that echoes the auditor reporting. And this is important that we make this clear, because what specifically needs to be addressed as part of that faster track would therefore include the requirements in ISA 260 in the analysis. So we could have the next slide, please. So then we're on to a couple more questions. So in terms of question 11, on the basis that addressing transparency is more of an urgent issue, does the board support the proposal to adopt option 2, i.e. keep the project as a single package, but bifurcate the project into 2 tracks? And then question 12, the board has asked for its view on whether it would be preferable to address the auditor's statement in the auditor's report in accordance with those paragraphs in ISA 700 together with the requirement in ISA 260. And it's back over to you then, Tom.
Thank you. Input on the project timeline? I think having heard the discussion today, the complexity of this all, and where I was at option 1 at one point, I understand why you reached option 2, Josephine. Isabel.
Yes, thank you. I always consider that when you have a big problem to solve, it's easier to split it into 2 parts than solving it as 1 part. So I understand that's what we are trying to do with option 2. And looking back at the history of IAASB, we've done that once at least. I can remember that we've done one for ISA 610, where we did the use of the work of the internal audit first, and then we did the direct assistance part, and the 2 parts were published separately and with different application dates. However, I think it's slightly different because not everywhere direct assistance is authorized. So it was not concerning everybody, the second part. When we have different application date, it's always complex to deal with locally. Because in some jurisdictions, you have to have your own exposure draft, you have to incorporate the revised standard in the law, and it's a long and complex process. And so I believe it will be difficult for some countries to adopt the project in 2 phases, and they may wait for the second one to do all the changes all together. So if we do that, it will postpone the adoption of the first phase. So that's one of the cons I can anticipate if we do option 2. But I understand how complex it would be to do option 1. I agree that we should consider, so to answer to question 12, I agree that we should consider together 700 and 260, but the issue we leave aside by doing that is that we touch at the auditor's report, but we will touch it potentially a second time with ISA 701. So do we want to reopen the content of the auditor's report twice? I believe there's no easy answer, and unfortunately, I don't have the right answer, but I agree with the complexity of the topic.
Thank you. Next is Sue.
Thank you. So I support option 2. I think actually in this case it's clear that this is the area that probably is going to be the hardest and will take a lot of input. So I think it's good to advance that. I think it will also allow us to learn for some of the work that's going to be needed later on for the other parts of the project. An observation, which is I'm sure that Billy and the team are on top of, but I'm also conscious that we have audit evidence due for approval as an exposure draft in September as well. So probably just to kind of brace yourself for those that will be on the board at that time. And then on 12, I think it's entirely appropriate to look at the 260 together with any changes that we'll be looking at for 700. I think as we learned through the auditor reporting project, it's very important that we consider the communications to those charged with governance at the same time as reporting, to make sure that they are aligned and there's no surprises in the audit report. Thanks.
Thank you. Next is Len.
Yeah, thank you, Josephine. I'm fully supportive of the option 2 as proposed by the working group. I think option 2 address the 2 key public interest comments. Number 1 is the convergence, try to align the effective date with the IAASB code, and also dealing with the transparency issues as well. So fully supportive. And I think coordination between the 2 boards are so important. I just want to take this opportunity to at least to thank IAASB in terms of 600 project, because they do have a group audit independence exposure draft, and they very much as much as work as they've done to align with our project proposal and effective date. So I think we should definitely support our approach going forward to align some of our projects. So option 2. And regarding question 12, totally agree with the 260 proposal, and thank you very much.
Thank you, Len. Next is Eda.
Yes, thank you, Tom. And I'll approach it a little bit differently in respect of question 12. I think Sue articulated it well. So my view would indeed also be that it's preferably to address both those aspects. I would like to point to Isabel, who rightly offered her view in well, if we go with option 2, you'll open 700 in 2 consecutive years. And is that really something that we want to put on the practitioners? I understand difficulties that the working group has in respect of its timeline, and I've hinted to this before. I think Kai Uwe said before that about what is within our merit versus the IAASB merit. And I was wondering to what extent the IAASB can do us the honor of aligning with our timeline on the public disclosure requirement of their changes. So to allow for a extension of that bit of their proposals to allow us to have the appropriate due process around our process. That would be my suggestion. Thank you.
Okay, Imran?
Thank you. Thanks for asking this question so early on, Josephine, flagging it for us. I didn't see the issues that Isabel and Ido raised, but and I appreciate that they raised it from a perspective of a practitioner, and I completely sympathize with them and agree with them. I was coming to this from another direction as to why option one was preferable to me, and I looked at it from the perspective of what my full-time job is going to be after my term on the board ends in a few weeks. And for that reason, I thought that standard setters, regulators, those charged with governance, they are facing a situation of limited resources, and dealing with this with a single package of proposals would be far advantageous. I was also concerned, Josephine, it's a point that others haven't made yet, is that we may have proposals coming through the board in the next 2 years about other changes to the reporting project, to the reporting standards, particularly from the fraud and going concern projects. And if we have those, you can imagine what kind of an unholy mix of issues we're going to have down the road if we have all kinds of amendments coming forward. So we may want to take Isabel and Ido's cue and have this wrapped up as a package, get this through one comment letter, one ED, so that we make space in the mind of the market to see these amendments separate to the amendments that will come to us possibly from our fraud and going concern projects. I think that offering it through any other approach will result in lots of energy and time, possibly some unnecessary complexity around interpretation. And that indeed much of the work, I think, in identification of where the issues are, your group has already done. That this is a finite list of areas in which we have to apply the IAASB code, and that within the timelines that you've described, it would be possible to achieve. I have a lot of confidence in your leadership on this, Josephine, and the board's ability to deliver it in one batch, please.
We all have confidence in Josephine's ability. It's whether we have confidence in our own discipline is the real challenge. Diane.
So my vote on question 11, I went with option 2. I thought it was the issue of the transparency is obviously pretty critical. The timing's important. And so I suggest I'm in agreement that you bifurcate the two topics. So I liked option 2. And then relative to question 12, like everybody else, it makes absolute sense to tackle this all together and keep it bundled. Thank you.
Next is Kai Morton.
Thank you. I also am in support of option 2 and the combination of the 260 together with this 700 as proposed by the group. Thank you.
Thank you. Sachika?
Thank you, Tom. I also support option 2. I think this is the most effective and also realistic way to address the issue. And with regard to the 260, I also support it to do at the same time with 700 because this requirement also directly relate to the provision in IAASB code. So I think it's preferable to address all together. Thank you.
Okay, Eric?
Thanks. I'm supportive of option 2. I do understand, though, that there are some risks with moving that part of the project faster than the other, because there may be issues that come up in the case-by-case approach that may have implications. But you know, I sort of am supportive of at least trying that option, although I think it would be good to pursue Edo's suggestion of talking to IAASB about whether that particular requirement could be delayed to allow us to go through our full process. If we can get it finished quicker, as we're hoping, then that would be a positive outcome. And on question 12, I'm also supportive of doing the changes to 260 at the same time. Thank you.
Okay, Wendy?
Thank you, Tom. I agree also with option 2. I'm a little confused in due process and what it means by no, I'm on 12 now. Have we conclude, are we exploring putting them together? Have we concluded that the public disclosure is required to be in the auditor's report? So to me, it's probably not understanding the due process, because I all through what we've done today, it's the project proposal. Are we in the right place to explore? So I'm just confused, and maybe Josephine, when she speaks at the end, can clarify that for me. And then I am concerned about the short timeline and potentially having many different changes to the auditor's report from many different areas, and how that plays into what we're doing here. So I like best 2 points that were already made. I think we know the issues. And second, is there any option for IAASB to delay the adoption of the public disclosure part until we've had enough time to explore the implications? Thank you.
Kaiwe?
Tom, thanks. I'm afraid that I support neither option 1 nor 2. I come back to what I have mentioned before. Since IAASB has not clarified by what means outside of the auditor's report users can be informed as to whether independence requirements for PIEs have been applied, and because I believe that auditor communication with users are within the remit of the IAASB, I believe that the appropriate solution is for IAASB to complete its definition of PI project without a requirement requiring such disclosure. I've mentioned it before. Rather, the IAASB should commence its project considering such transparency together with the other remaining public interest issues. Thanks.
Thank you. Lynn?
Thank you, Tom. I initially preferred option 3 because of the first 2 pros in the table of being less demanding on stakeholders, so they could put all their comments in together. And secondly, because of the fact it gives a more holistic view. However, I can live with option 2. On question 12, I think across a number of our projects, bringing together the auditor reporting together with reporting to those charged with governance is becoming a bit of a theme and makes absolute sense to me. So I support that. Thank you.
Thank you. Fernando?
Tom, thank you. And just for the record, I want to express my support to move forward with option 2. Thanks.
Thank you. Julie?
Thank you. I was in the same place as Lynn. I had a slight preference for option 3. I thought what Eric described as a potential consequence of having them separated rang true with me, but I can live with option 2. So I didn't have my hand up originally because that I thought the options proposed by the task force made sense. I think what I would just want to come in on here though is to support what some others have said. Eric and Ado said it as well. I referred to this a little earlier in my comments around the timeline. and the strong interconnection between the requirement that's going to sit in the code and what we're going to end up having as a requirement in our standards. And I'm concerned that we're not on the same timeline, and that's problematic for me. And so the suggestion that that piece could be deferred would solve my concern, because I think we need to have our own due process to understand the how, which is what we're tasked with, because we already have the what. And if the what goes too far ahead of the how, I'm just concerned that we'll end up in a position where we may be either rushed or we may not meet the objective that we're set out to achieve. So I just wanted to come in and support that point. Thank you.
Roger? Roger, are you frozen? I think Roger may have frozen at the key moment. I guess I have to assume he was fully supportive of 11 and 12 as presented. So
yeah, I'll take that.
Yeah. Let me just react to a couple things. So I alluded to it in the outset that I sort of see the appeal of one, and obviously that's an optimal course of action. My concern is, having heard the discussion today and recognized timeline, that something around 2 is the only practical outcome that we could achieve. And one of the things that I didn't find personally don't find particularly convincing, but maybe that's just me, and if the board is a collective entity, is the comment about 700. I did hear throughout the discussion earlier that we're concerned about boilerplate. Now, I'm not sure that these are big changes in 700. I recognize that they are changes and may be significant, with significant public interest impact, but by itself, I'm not entirely convinced that the public interest couldn't tolerate back-to-back changes in 700 if they're relatively narrowly scoped. The other thing I would point out in the discussion from my perspective is we should be conscious of the public interest demands on IAASB regarding their timeline. I am sure, as we hear with every project from public interest authorities, that there's a demand for quicker adoption rather than later adoption. And so I'm certainly open to asking IAASB to consider its implementation date as it relates to the reporting requirements. But I just beg our board's sense of perspective on that issue as well, and note that we have to have a timeline too. And it may be easier at a later date for them to delay implementation rather than push it back at the start. So I'm open to asking. I just beg our board's sense of understanding to the predicament that they lie in when we consider implementation periods as well, because there is significant public interest. And I don't know if Mike or Ken are still on the call, but they could probably speak to that matter and why they chose the date that they did. So that's my perspective. I think in general, you have support for option 2 with some concerns. Like, there is diversity. I view this as sort of a bell curve of things that we've heard, where the preponderance of the board and the center supported 2 with some caveats through it, but not unanimous, Josephine, and sort of support for the way you laid out question 12.
Yeah, thank you. I think the support for question 2 recognises that issue of transparency is more critical, and that's certainly in respect to trying to line everything up so that all the changes to, say, ISO 700 go through at the same time. It would be quite difficult because we can't foresee what will happen in the timelines in any other projects. So holding off on this critical aspect for any other changes coming through in 700 wouldn't, in my mind, be appropriate. But of course, I do hear the caution from the board, and and I agree. I think it's worthwhile just mentioning, I don't know if Mike's still on the call, it is worthwhile mentioning, and we will do, to the IAASB task force, that there was suggestion that perhaps that particular aspect of the changes to the code, so 418, could have a delayed effective date so that we get a little bit more time in dealing with the whole project together. But when the PI task force put these proposals together, it was on the basis that that effective date has already been discussed several times at the IAASB board and agreed. So we had to really go with what they had landed on, basically, in terms of their timeline. But we will certainly go back to them. But yeah, I think that's sufficient feedback. Thank you. In terms of question 11 and 12. And I could probably move on to the next slide, Tom.
Sorry, Josephine, did you want me to just go in? Mike, I am still around.
Hey,
Sorry,
Mike,
Mike.
switch to the second page because you were off camera.
That's fine.
Come on in.
Please, go ahead.
And thank you, Tom. I think you summed it up well. I mean, there is always a pressure to get on with these things, as you know. And having got to this stage, I think what the IAASB board is very clear on is that it's an integral part of what we need to do in terms of setting independent standards, that there's transparency around the independent standards that people then apply. So I certainly think the board feels quite strongly that it wishes to make the independent standards as it relates to PIs transparent to those stakeholders who are interested in it. If we had a deferral, it would only be a deferral in terms of when that requirement came into effect. And my question would be, and I think you summed it up well, that if we run into, for example, your project looks like it's going to produce something, but it's slightly later than we might envisage, we could always defer and decide later to defer. But if we have got a requirement, it's going to have to be dealt with one way or another. And I would hope that within the time frame that we're looking at, particularly if you're going down option 2, we would have some very clear steers as to which way it was going at an early enough stage to take a view about whether, because at the end of the day, it's not a big implementation effort on behalf of auditors if the conclusion is to put it in the audit report or to put it anywhere else. Frankly, it's not a big deal. Therefore, I'm not sure for this particular part, you need a long implementation running. And I'm hoping that your project would give sufficient steer that we could take an early view as to whether that deferral was absolutely necessary. But I think the boards, and I will relay back this conversation, obviously, to the next board, but I do think from the sense I got of the last discussion is the board is persuaded at the moment that it would be sensible to stick with the current effective date. That might need revisiting in the fullness of time, but there's more trouble, I think, in terms of getting local bodies to do what they need to do in the time frame that we're looking at than to worry about where the disclosure is made. So if that timetable works, then this one should as well.
Okay. Josephine.
Thank you, Mike.
Okay, back to you on the way forward. Are you?
I've got less than 3 minutes. So way forward. So first of all, many thanks to the board for all this incredibly helpful input today. And again, thanks again to Mike for joining us. That was really, really helpful. In terms of the next steps, the board's input on the IAASB proposals are obviously going to be considered by the IAASB PI task force as they work to final approval in December. The working group and the correspondent members will, of course, continue to liaise with IAASB as they go through that process. Then in March next year, we will hopefully be in a good position to finalise our project proposal. So that's where we are at this point. I don't know if anyone has any questions about the next steps. Oh, James.
No, I just wanted to comment on the exceptionally well-prepared project proposal already. And I think my quick takeaway is the board's been very supportive of both the content, the clarity, and the direction. So to the extent possible, I understand capacities and workloads, but I would anticipate the March discussion shouldn't be a very intensive discussion. I think we've got a lot of support already by the board, and to the extent time is spent on thinking through and getting advanced steps on the issues and the application of the proposal. I think that would be better time well spent. I've sensed a lot of support for the proposal, and that the refinements probably shouldn't be redeliberating what we've had already today. So I guess kudos as well, and just to progress and make most of March as possible.
Thank you, James. That's my read of the meeting that we got. Like, I think it shows that, like in anything, that standard setting, once we get to the pure standard setting part of this, won't necessarily be smooth sailing. Obviously, we have a lot of issues and complexities to judge. And also, this is the complexity of managing two independent boards committed to a convergence process too, who are on slightly different speeds. But I did get a sense support for the direction of the proposal, with numerous and good signposting along the way of where the challenges would be. So I think that working group will be really sensitive to it. Mike, I hope Mike feels like he got some constructive feedback to bring to his board, but I think also encouragement that we're broadly supportive of the direction as well. Josephine, anything to add on top of that?
No, that's great. Thank you, Tom.
Okay. I'd be remiss. We talked about a lot of public interest issues, and one of the top ones is convergence between the two boards, the name of the public interest. So, Karen, do you have any observations you want to share with us on the meeting that you heard today?
Thank you so much, Tom, and thank you to Josephine for this important work and for the very rich discussion today. I just make a couple of comments. The topic, public interest entities, is of utmost public interest to the PIOB. And, I won't suppose that the project will be taken on, but I am hopeful from the discussion today that it will. And the PIOB is very welcoming of that. I wanted to say thank you for the way Michael covered the PIOB's concerns about the definition and the removal of CIVs and pension plans. So thank you very much. That remains a item for us to follow up with the IAASB as we move towards the December timeline. And on the last topic that we have talked about, I'm sure you're no surprise that the PIOB would have preferred option one, but we recognize the practicality of that, and that is, it's good that we're moving forward on some of it if we can't do all of it. So I hope those comments are helpful. Thank you very much, Tom.
Thank you, Karen. And on that last point, we discussed last week with the PIOB the challenges of being hitting timelines and resources, and it's really a question of prioritization. I believe that, based upon the discussion today, that we will do all of it. It's just a question of how we hit the timelines in a way that best coordinates with IAASB's requirements as well. And we don't want to necessarily slow their requirements down too. So, as we heard from that whole discussion about implementation date. Vili, I call on you. Anything you want to add from a technical director perspective?
Thank you, Tom. No, nothing from me at this stage.
Okay. Well, there's a really great discussion. I'm really heartened by the spirit here. I believe we landed in a strong place that gives a strong message of convergence with IAASB, really also not blind convergence, but thoughtful convergence as well. So thank you for all your comments. Thank you for the exceptional work of the working group as well in preparing these papers. They were very clear and made it very easy to follow and to comment on. We still have another day of sessions tomorrow. Tomorrow, I beg your patience with us as we do our test run on a hybrid meeting from our New York boardroom, which will be great because it's a sign that we are getting closer to in-person activity at this board. Great rest of the day. For those who are closing their days out, have a good close to the day, get some rest. We'll see you tomorrow. For those who need to get some sleep, And for us who are just beginning the day, we have more to do. So thank you, and I'll see you shortly.